This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, January 20th, 2015. So the euro remains under pressure, with the market recently breaking down to a fresh plus 10-year low at 114.60 ahead of this latest minor consolidation. With the downtrend firmly intact, any rally should be very well capped by previous support turn resistance in the 1760 area, where a lower top is sought out ahead of the next major downside extension below the recent lows that we saw at 1460 and towards next key support in the form of the November 2003 base at 113.75. Sterling dollar. Cable continues to consolidate just off recent 18-month lows at 50.35, and the pressure remains focused on the downside with a break below 50.35 to expose the 2013 base at 148.15. Dollar yen. Dollar yen has been very well supported on recent dips ahead of key support at 115.55, and the uptrend remains firmly intact, with the market focused on an eventual retest of the recent 7-year high from December at 121.85. Euro Swiss. Euro Swiss has been consolidating over the past several sessions between the 97.10 and 106 area, and a break on either side is required for the next key directional bias. Aussie Dollar. Aussie Dollar remains locked within a downtrend, and the market is in the process of correcting a little bit in search of the next lower top ahead of the fresh downside extension below key psychological barriers at 80, exposing the 75 handle further down. Dollar CAD. Dollar CAD has recently rallied up to fresh plus 5-year highs above 120 to 120.45 about ahead of the latest minor consolidation. Daily studies are a little bit overbought, so there is risk for a pullback, but ultimately a higher low is sought out somewhere above 116 ahead of a fresh upside extension beyond 120.45. Kiwi dollar. Kiwi has been locked within a multi-week consolidation within a broader underlying downtrend, and the market is eventually expected to trade lower below the key support at 76.10 in favor of a break towards the 72 area over the medium term. Ultimately, only back above 80.35 would compromise the bearish outlook. S&P 500. The SPX 500 has been in the process of carving out what seems to be a medium-term top, but a break below 1968 will be required to confirm and accelerate declines. Gold. Gold has recently broken out through key resistance at 1256 to suggest a medium-term base is in place now, with a focus on an acceleration towards next key resistance in the form of the high that we saw back in July of 2014 at 1345. That's all for today.